Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, you're watching Trading Hour on CNBC TV18. I'm Ekta Batra. With me is Prashant Nair. Turning out to be a day where we're just about taking a breather for the markets after the strong run that we've seen. So the Nifty is just about consolidating at these levels with a little bit of a negative bias. And we have the Bank Nifty, which has actually done quite well on a week-to-date basis, up around 2% week-to-date, is seeing some amount of profit booking. A lot of stocks in focus. State Bank of India would be top of mind on account of its numbers coming out today. But separately, something like a Jet, Matrimony, all of these stocks in focus on account of various news pieces. Hi, Prashant.
Ekta, hi, good morning. So for the week, and this is of course subject to the market closing where we are, the Nifty will be up 0.75%. The Bank Nifty is the outperformer this week. It's up 2%. We've got the mid-cap index, which will end higher by about 0.6%, and the small-cap index will be flat but positive. And I mean, this is, again, nothing to scoff at because we've had weeks of strong gains, especially in the broader markets. Well, you know, we're going to talk more about markets. We'll get you strategies, but it's time to address earnings. JSPL is trading under pressure. It's down 1% or so. Earnings beat street expectations. Domestic steel business posted stellar numbers, while the Oman business performance was also good. Naushad Akhter Ansari, CEO of the steel business of JSPL, is now joining us to talk about the numbers. Thanks very much for joining in. Could you begin by telling us the EBITDA per ton, which you registered in the quarter, and what is the future for this looking like?
Yes, so if you look at our performance in this quarter, it has been quite well both in terms of production as well as in terms of revenue. I mean, production went up by 36%, revenue went up almost 100% on a standalone basis, and EBITDA has also gone up by 119%. On a EBITDA per ton basis, if you look at it, it's close to about 13,800 rupees, 13,840 or something like that, and which is almost 1,000 rupees more than the last quarter which was there. And compared to last year, of course, it is almost 50% higher. So yes, I mean, these numbers are quite good. We are very happy to report that. Going forward, of course, I mean, you know, India is in monsoon season, and monsoon season is as expected. The long prices always go down, and that's what is also happening. We also see that that in the month of later part of July or in August, you know, the long prices, especially in terms of TMT, etc., they have gone down quite a bit. But you also see some positives. We see, for example, the secondary has already started increasing their prices, you know, so therefore I'd imagine that going forward in a very short period of time, again the prices should you know, improve, and in the next quarter, of course, they should come back to normal. So that's the way that we really expect.
Fair enough. I mean, what is the total price correction that we've seen in steel? Could you tell us what is the situation now as compared to, which is July till date, as compared to April to June?
Let me also tell you this a little bit, that we are both in long and flat, and as far as flat is concerned, that reduction is very minimal. You know, it's very small, maybe about 1.5% kind of a thing, just simply because of out of sentiment that because the long is coming down, so little bit impact is also coming on the flat. But primarily the flat is down almost by about 1,500 to around in that region, so which will correspond to close to about, let's say, 3.5%, 4% kind of a region.
Okay. What about sales volume targets for FY19? Is 8.5 MT to 9 MT on the cards?
Yes. So if you look at Oman should actually be doing more than 2 million ton in this year. We have got some additional gas in Oman, and you know, they should be utilizing it well. We have also set up additional casters, so that should also help in increasing that. So I'd imagine Oman should be doing more than 2 million tons, somewhere close to about 2.1, 2.2, around that. As far as India is concerned, we do expect that it will be somewhere between 6 to 6.5 million tons. So therefore, we are close to the numbers which we have talked about. You know, that's the way that it's going to be. Whether it will exactly 9 or it will be, let's say, somewhere between that 8.5 or so, you know, it will be, but it's going to be in that region only.
Okay, you mentioned Oman, just dwelling a little bit more on that. The EBITDA has looked good for the past 2 quarters. What's your sense in terms of what we could expect for FY19?
We would love to have that number. Obviously, in Oman also there are some impact, seasonal impact, which is there, and we do find that the prices have dropped a bit in Oman. But it is also, I know for sure that is going to be corrected very, very soon. What had happened is in the last month or so, the stocks had built up a little bit, some payment issue from the government, etc. But that's all getting resolved, and so that has led to some decrease in the prices. But as far as the target of somewhere close to about 300 million, yeah, that target remains.
Fair enough. I mean, could you tell us an update as far as the power business is concerned? Are you likely to sign more PPAs? Also give us a sense of the coal availability at this point.
I wish I could be as very much optimistic on that, but however, as far as power business is concerned, coal remains the single biggest issue which is there. As far as demand is concerned, we have seen some positive. Last quarter has been better compared to earlier quarter in terms of the cash profits which are there. It has been higher, of course the EBITDA has been higher, but having said that, the real spoiler still continues to be the coal. We still don't have a very good visibility as to when the coal is going to be available, how it is going to be available. We are hoping that it improves. Last quarter was a little better compared to earlier quarter. Going forward, it needs to maintain not only this, but fairly it needs to accelerate the availability, and as of now we are not absolutely sure of that.
Mr. Ansari, tell us a little bit about your debt reduction efforts. What's been the quantum that you've been able to pay off? What does it look like at this point?
So roughly, if you look at in the last 1 year, our debt has come down by close to about 2,500 crores. Of course, now that the exchange rate has gone up, so the foreign loans have become, in rupee terms, have become a little larger and so on. So currently, if you look at our number, it is somewhere close to about 42,800 or something around. That's the kind of number which we have at the moment. And this going forward, certainly we are extremely hopeful that it will come down by about 10% or so. Around 4,000 crore is something which we should be able to bring it down to.
Okay, and lastly, any plans to list your Oman business?
Yes, so that work is going on. Whether it will happen in this calendar year or financial year is slightly difficult to say, but all I can tell you at the moment is yes, the work is going on, and a lot of people are working on it. We have engaged some organizations to do that work. So, but these things do take a little time. So it might, we should be talking about it maybe in another quarter or so.
Mr. Ansari, thank you very much for your time. Appreciate you joining in, and good luck with business. I mean, the stock has actually come off a little bit more. When we began the conversation, it was around 1%, down 1.8 plus now, 213 on JSPL. Let's get some ideas in terms of trades. Rahul Mohinder of Viratech.com is now joining in for a quick technical check on the market. Rahul, thanks very much. I mean, your sense of things on the Nifty and the other indices, how are we set up?
In the morning, as I was mentioning, 11,500 I think is very established resistance. But the question is, at what point does a trader start to worry, someone looking at that near term? I still think there's enough support lower down. So if we drift lower another 30-40 points, we could probably see support more towards that 11,400 mark. I would really worry on a slightly bigger picture if we break 11,330. Unless that breaches, I don't think this secular trend in terms of at least the Nifty index has really broken down. So I still think we're steady. I still think the bank Nifty is the one that has the edge, particularly with the PSU participation which is coming in off late. So all in all, still positive, no reason to really break the trend.
Okay, what would your stock calls be then in that context?
I think we have a couple of ideas. First is going to be a buy, which is going to be on M&M. This is more an intraday kind of scenario. We're looking at a move to about 955 on M&M. We could keep a stop loss of 933 on M&M. We've seen particularly good volumes in the first 2 hours of trade, substantially above average. I must point out 944 has been a hurdle for Mahindra & Mahindra in the past. but it's important that we should see it taking it out today and move to a newer scale. So near term would be 955. If you're willing to push this further, we've got longer term targets at about 980 set. Another one would be TCS, and we've been very stagnant around this 1960, 1975 area. And I think what's happened in the last 1 month is we've built a lot of volume, which has come across at 1970 odd. So I think my sense is one should buy TCS, medium to long term positive stock for us. 2030 would be my target. This may not occur intraday, could take a couple of days. I'd buy it with a stop loss at 1950. Finally, IDFC Bank is a stock we like, in addition to something like a Yes Bank. So with a 40 rupees stop loss, we should be moving safely to that 47, 48 area. Here too, I'm positive.
Okay. All right, Rahul, we're going to let you go on that note. Thanks very much for joining in. There's some incremental weakness which is seeping into our markets, and that's probably because of what's happening with Asia. Seems as though it's extended its losses. It has been weak, but if you see, Hang Seng is down around 1% at this point, and even the Japanese market's down around 1.3%. Straits also down around 1.2%. So maybe there is some amount of incremental weakness, and that's percolating onto us. Bank Nifty also at the low point of the day, so down around 0.4% currently for the Bank Nifty. Let's get in some more F&O strategies. We have Krish Subramaniam joining in to tell us what he's strategizing then. Krish, over to you, stocks as well as index.
Yeah, morning Ekta. Promises to be an interesting day with a couple of heavyweight results. So keeping that in focus, giving a strangle strategy in Bank Nifty, that is recommending a buying of a strangle, wherein one could buy a 28,300 strike put and a 28,500 strike call. The net cost comes to about 240, keeping a target of 400, and maybe one could keep a stop loss of 120. And the stock specific, again a strangle strategy in SBI, which could see some volatility today, and recommending buying of a 300 strike put and a 330 strike call. So the total cost comes to about 12, keeping a target of 24 and stop loss of 6. The last one is a bear spread in Hindalco. I think it just might have done this upside, and we could see some profiting coming about. So one could possibly buy 225 strike put and sell a 210 strike put. The net cost comes to about 480 to 5 rupees. So the maximum one would make is about 10 rupees and keeping a stop loss of 2.
Chris, thanks very much. Appreciate you joining in with those two trades. We'll have you back soon. Well, the market is down, what, 40 points? Yeah, we're down 40, which means we're at the day's low, almost at the day's low on the index. I mean, I think the small cap index is down 3/4, if we can quickly put that up. And the mid-cap index is down about 0.12%. I think those also are almost at the low point of the day. This is a bit of a pause after such strong performance that we've had. The biggest, sectoral losing index is the PSU Bank index. The PSU Bank index yesterday was the top performing sector, and today it's performing on the downside. Still about 38-40 points lower as far as the Nifty goes, and nothing really changing in the broader space as well. We promised commodities, and commodities, here they come. Manisha is here in the studios to take us through what's happening in that part of the market. Manisha, morning.
Thank you so much for that, Prashant. Until now we have been talking about estimating on what the US-China trade war really could bring about. We have been talking about the list, about the numbers, about impact. But the first impact actually is here to be seen. What we are given to understand is that nearly $20 million worth of soybean cargo is holding just outside China coast at Dalian, and this ship actually contains about 77,000 tons of US soybean, which actually has not come within the deadline, and 25% tariff is imposed on that. And just to ensure that that ship is near Dalian, is off China, it is $12,500 per day of a cost already coming in on this ship. We'll understand that the soybeans are the top US exported commodity to China, and if you just look at the last year numbers, worth $12.7 billion worth of soybean was exported into China from US. So this clearly is the first impact, the first ground impact or sea impact that we have seen come in. And that's not just that. An immediate similar soybean or rather copper cargo is lying just outside the US coast as well, as that also has not been able to meet deadlines, and there are tariffs imposed on that too. So what happens to this? Where does it go from here is something that the markets are still looking to watch out for. But these are the ships which are off the coast. There is more commodity like that lying on ground, finding new markets. So that is what the prices will, of course, take impact from. To talk more about that and other issues that soybeans actually are facing, we are now joined by Mr. Atul Chaturvedi. He's President SEA, and he joins us on a phone line right now. Mr. Chaturvedi, hi, thank you so much for joining us. First of all, what is your sense on the soybean trade and prices given the US-China trade war?
My take is very simple. Whatever is going to happen is going to change the way business has been done till now. You could have a scenario whereby American beans might actually find its way into China via Brazil or Argentina. Mm-hmm. So what we are also seeing is a lot of American beans are actually moving into Brazil and into Argentina. And American beans are getting converted into oil and meal in Argentina and finding it's likely to find its way into China. So the rules of the game are going to change, and the trade flows are also going to change as we go forward if this trade spat is not resolved.
True that. And, you know, that's not just one space of it. The other, of course, is the kind of edible oil and refined oil that is finding its way into India as well, and that is via SAFTA. Is exactly the reason we called you to speak to us. Zero duty import is what we are seeing from these countries, while the other countries have to pay hefty import duties when they come to India. How are you as an industry tackling it right now? What are the presentations that you have made to the government regarding this?
No, this is one issue which is bugging the industry real big time. In fact, yesterday, the whole day I was in Delhi, meeting all the secretaries of Government of India, both the Commerce Secretary as well as the Food Secretary, and trying to tell them whatever your efforts are towards improving the oilseed cultivation in the country by having higher import duties, all this is getting negated by a treaty which India had entered into with the SAFTA countries of allowing zero duty imports. But having said that, it does not permit those countries to send goods to India under zero duty for the simple reason that the rules of origination and the country of origin, if palm oil is coming into India from Sri Lanka or Bangladesh for that matter, it is not a product of that country. It is a product of either Malaysia or Indonesia or maybe Thailand. Similarly, if soya oil is coming into India via Bangladesh, that also is not a product of that country. So I think the government of India needs
what
to
you're saying is that,
tighten its belt.
So, Mr. Chaturvedi, what you're saying is that one, of course, the treaty is having its impact. On the other is that whatever import that we are seeing isn't even lawful in that sense.
Absolutely, absolutely. This is exactly what we were trying to tell the government and the government functionaries yesterday was that all your efforts are going to get negated, and you might have a situation where the floodgates are getting opened into the country. On the one side, you are having 55-60% import duties, and on the other hand, the floodgates are opening a zero duty.
So what's your sense really on prices going forward from here? Because this perhaps might take some more time before this is resolved. So what's your sense on prices for edible oil sector going forward?
My take is that if the government takes its own sweet time in deciding on this, then our prices are in for big-time bear grip. Because if zero duty versus 60% duty, then you are in for very, very serious problem. And I'm sure this will be a great disservice we would be doing to our oilseed farmer. As it is, the Indian oilseed farmer is not very enthused with the oilseed returns.
Absolutely.
And this is also going to discourage him still further. In fact, let me tell you, Manisha, a little story. I was in Indonesia about 15 odd days as leading a delegation there, and we happened to talk to the Indonesians. Then one of the CEOs of one of the big companies there, he talked about the Indian duties. So we said that India has to protect its own oilseed farmer. He says, you can keep protecting your oilseed farmer, but we have this wonderful slap and dash approach we are sending the goods to Bangladesh, and then they're touching the Bangladesh shore, and they're finding his way back to India.
Well, that's exactly what you told us. Well, yes, it is quite a situation really, because other countries we have to pay. I mean, there is 60% import duty on edible oil seeds, but under SAFTA it is 0% import duty. So there clearly is quite a bit of a rift or a gap, as you can see, when it comes to imports of edible oil seeds in case of India.
Okay, all right, Manisha. Thanks very much for that. Well, I just want to concentrate on one stock, that's Tata Motors. They've come out with their retail sales for the month of July. Remember that the Q1 numbers, which came out on the 31st of July, were any which way impacted because of poor JLR sales. So this is probably not going to bode well for Q2, and probably an indication of what we can expect. It is a JLR total year-on-year drop of 21.6%. Jaguar is down 15%. Land Rover is down 24%. On a year-on-year basis. Compare this to the first 7 months of the year, where JLR as a whole is down 2.4%, Jaguar is down around 3% and Land Rover is down around 2.2%. So the extent in July, because of issues such as market uncertainty and duty changes in China, etc., is probably what has impacted sales. But nonetheless, weak numbers coming in. The stock, any which way, has fallen from levels of around 260 rupees post its Q4 numbers all the way to 252 at this point in time. Well, in terms of specific stocks, what stands out is Sun Pharmaceuticals. So now that stock is at the low point of the day, down 2.5%, reacting to Taro's numbers, plus maybe there is some amount of trepidation ahead of its numbers next week. So Taro reported what was a little bit of a sluggish set of numbers, revenue down 4% year-on-year, but what disappointed the most was the margin crunch, which came through on Sun Pharma this quarter, on Taro this quarter, at around 40%. It's 1/3 of Sun Pharma's numbers, so it's probably a little bit of a read-through for that. But the other stock which is in focus is State Bank of India. It's under pressure ahead of its numbers, so down around 2%. Abhishek is here to apprise us of the key expectations from SBI. Abhishek, over to you.
All eyes will be on slippages for SBI, which below 15,000 crore will be positive. Anything above 20,000 crore will be negative. Analysts on street are working with a number between 16 to 20,000 crore. The gross NPA movement, as we have seen with other PSU banks, if they show a strong recovery, gross NPA between 10.8 to 11% will be positive. Now, slippage from the watch list, SMA 1 and 2 accounts, which constitute about 25,800 crore, that will be seen very closely. The provisions are expected to remain elevated due to the fact that NPAs are aging and you have a mark-to-market treasury loss which needs to be provided for. Loan growth expected to remain muted, just grow at 2% sequentially. The net interest margin can improve because of the fact that there is strong recovery in the NCLT cases. Last quarter, the net interest margin was at 2.5%. Our polls suggest NII growth of close to 15%, while net profit can be down 78% YOY to about 450 crore. But remember that we are expecting a net profit as against a net loss of 7,700 crore in the previous quarter. Back to you.
Okay, Abhishek, thanks very much. Well, the SBI management will be speaking and they'll take questions. Rajneesh Kumar and his entire team at 2:30, and we'll of course cut live to that. And we'll have Abhishek of course back once the numbers are out a little before that. Okay, I think we have Ashwini ready with us. We're down 34 on the Nifty. Let's ask him what he makes of things. Ashwini, good morning. So, what is your advice? What should one do now?
See, there is a bit of correction from 11,500, but on the downside also there isn't great follow-through. So, the sense is that it's a time when you don't overextend on either side. And at this point, we have covered our shorts and are now long on Bank Nifty, because in the banking space, 6 banks are higher and probably an equal number are lower. So today is a kind of day when retail banks could save the day, and corporate lenders could see some downside. But overall, it does not look like a big downside, and given that we've come off the highs, this is a good time to take the other side, which is the direction of the trend. Having said that, Yes Bank is a buy with a stop of 384, target of 410. IndusInd Bank is a buy with a stop of 1985, target of 2020. And Sun Pharma is a sell with a stop of 562, target of 540.
Okay. Ashwini, a couple of queries then. Saurabh holds 20 shares of Hindustan Copper at 100. since the last 6 months, wants to know whether to hold or sell.
See, basically sell because copper has had a great bull market. The stock didn't really do much at that time. Unlikely, these stocks tend to, perform because broadly PSUs by nature are underperformers.
Okay, and we have Satish who wants your view on Hudco, whether it's a buy at current levels.
See, again, similar story. If better NBFCs, even private housing finance companies can't do so well, unlikely that Hudco can do it. Everybody is trying to get into all of these underperformer, stocks where no institution is going to get in. Even if you buy Bajaj Finance today, at some point you will make money. So still, stick with quality. The low interest rate regime is over, and these smaller NBFCs may not compete as much.
Okay, Ashwini, thanks very much. Appreciate you joining in, and of course we'll see you back at 12:30 in an hour's time. Kirloskar Oil numbers at the bottom of your screen. So profits are up 12% at almost 50 crores compared to 44 crores. So it's about a 10% odd plus increase. Revenues are up about 4%, 820 crores. Compared to, I think there were two numbers, but we'll sort that out. EBITDA is also up about 4%, 81 crores compared to about 78.5 crores. Stocks up about 2.5% odd.